Oh, hey everybody. Frank Markow here. Good to see you. You caught me in mid-sip. All right, I'll stop drinking my coffee and get into this week's lecture. Today we're going to talk about church budgeting and accounting, emphasizing the importance of sound financial management and church leadership. Now, you might be watching this and thinking, man, I signed up to be a pastor. I didn't sign up to be an accountant. Why do I have to learn all this kind of stuff? Well, because part of your responsibility, part of your biblical stewardship is to understand how sound financial management works. And so you need to understand about budgeting and about accounting and about fund accounting and the different tools that we use in the church world to keep track of all of these things. So you're not going to be an expert accountant by the end of this, but you will be introduced to some of the key principles and ideas of budgeting and accounting and some of the tools that are used. So this is part of your stewardship and responsibility as a leader in today's church world. So hang on as we go through all things budgeting and accounting in this week's lecture. So some people confuse budgeting and accounting. They're both part of the same overall area, but there's an important distinction. You see, budgeting has to do with what you expect to take in and spend. It's really a planned, operationalized in numerical value. So you understand how much money you'll have and how much money you'll need to spend in order to reach your goals. Now, accounting is what you actually took in. So a budget is a projection of expectations of income and expenses, but accounting is what you actually took in and spent. And of course, as you can imagine, there's going to be a difference there. Maybe you budgeted for this amount to come in, but only this amount came in. That is called the difference where you're either over or under budget. So if you've heard that phrase before, we're under budget, that means that you didn't get as much money as you thought, or more likely you've heard the term we're over budget, right? That means you spent more money than you thought you were going to spend. And so churches must accurately record income and expenses and categorize them correctly and comply with financial regulations. And we'll talk more about that in the future. But transparency is so important. And, many a church has gotten themselves into hot water because they were not very transparent with their finances, and they weren't accounting for their finances correctly. And so not only is this a stewardship issue, but as a member of the public, you have a fiduciary responsibility to do correct accounting and have financial transparency of your accounting so that people can ask and people can know what your accounting is for any given period of time. So really it's not just stewardship, but it's a moral and ethical issue that you understand and practice good budgeting and accounting principles. So why is budgeting important? Well, budgeting allows churches to plan for their financial needs, to allocate resources efficiently, and ensure long-term sustainability. Okay, can you tell I'm going on the prompter here? I got some notes, but I want to make sure I cover everything. But it's sometimes we neglect these things and we think they're not important because we're in the ministry, right? We're not accountants. But good budgeting gives you peace. It gives you the parameters by which you can plan. You know how much you're taking in. You know how much you can spend. And so it allows you to plan and ensure that you have success. So last week we talked about goals, right, and objectives. But this is sort of operationalizing those goals. So it's one thing to say, we're going to start this ministry, or we're going to do this outreach, or we're going to, whatever. It's another to actually budget and make sure that your income is sufficient so that you can do those things. Now, of course, we talked last week about stewardship and biblical examples of stewardship and those things. But Proverbs 21:5, here's another one here that you might find interesting. The NIV says, "The plans of the diligent lead to profit as surely as haste leads to poverty." The same version of the New Living Translation says, "Good planning and hard work lead to prosperity, but hasty shortcuts lead to poverty." And I think, unfortunately, some church leaders are guilty of, right, hasty shortcuts. So in other words, they don't think about where the money's coming from, they don't keep track of where the money went, and they get themselves into sticky situations, not necessarily poverty. Obviously, this Proverbs accounts for all of life, but in a church sense, you can run out of money, you can not have enough there to actually do what you say you're going to do. And there's another interesting scripture here where Jesus says, nobody builds a building without first counting the cost, right? So if you're going to plan to do something, you need to count the cost. And that's really what budgeting is. It's counting the cost ahead of time. And so budgeting supports ministry by enabling churches to focus on ministry activities rather than financial emergencies, right? And nobody wants to face that at the end of the day. You plan for something, and you're like, oh, we don't have any money left. We can't afford to do that. Sorry, folks, we were going to do this and that, but we weren't very good with finances, so we ran out of money to do that. Nobody wants to be in that position. So understanding budgeting allows you to fulfill the ministry activities and rather than reacting to financial emergencies. Okay, excuse me. So let's talk about the how to create a church budget and what's the key components of it are. So first of all, you have income, right? Now, what is income in a church context? Well, things like tithes, right? You pass the plate, you have a push pay app, people are contributing money through their tithes. And tithes are generally considered undesignated funds, and they can be used for any part of the church budget. And then there's offerings, right? Offerings are specific kinds of things for particular areas. So you might do a special offering for a person or an emergency or a ministry, missions, local outreach. There's lots of ways that churches can have a designated offering for something. Now, what kind of expenses does a church usually have? Well, staffing is one. If you're a bigger church, you have staff people, maybe the senior pastor, maybe associate pastors, maybe janitorial staff, maintenance, youth leaders, full-time, part-time. So that's probably one of the biggest expenses for any organization is staffing. But then you also have things like, building maintenance, right? If you have a building, ministry programs need money to operate, outreach, utilities, right? You need to keep the lights on. And then there's other things too, like insurance and, you got to pay for an accountant to help you with all these sorts of things. So there's a multitude. Churches have a lot of the same kinds of expenses that any other business has in order to keep the lights on, right? Both literally and metaphorically. And then there's a difference between the income and expenses, and that can constitute your savings or reserve. So if you have more income than you do expenses, and this is an axiom of good budgeting, is that you never budget 100% of your expenses. You never budget 100% of your income, so that you do have some left over, and so you need to have some savings and some reserves for certain things, right? So for emergencies, you should have a building fund. You should have a building fund reserve. So in case you need to put on a new roof or you need to paint or those sorts of things, right? So you have some set-asides there, a reserve, savings, whatever you want to call it, for future events. All right, so some of the steps for creating a budget. Well, first of all, you review past income and expenses. So you look at last year's, you look at how much you took in, and you look at how much you spent, and you say, all right, do we think we're going to get more income this year, less income? Are we going to spend more money, or are we going to spend less money? So you typically use last year's. Now, there's something also called zero-based budgeting, where you just start from scratch. But in my experience, that's a lot more work, and you've already established a certain baseline. So unless you're going to start laying off, staff or completely redoing things, you're probably not going to do zero base. You're going to use last year's as your starting point. Then you're also going to project future needs, project future revenue needs. So you look at the past, and then you project what you're going to need for the future, and then you allocate funds based on ministry priorities, right? So again, a budget is a plan, a strategic plan, operationalized in numbers. And so if you said that you were going to start this ministry or run this program, then you have to allocate the budget in order to support those ministries. And then, of course, you have to regularly review and adjust them. We'll talk about budget versus actual here in just a minute. All right, so what are some of the stages of budgeting? So those are kind of the big pictures. Here's some specific stages you want to go through in order to do this process. So planning, budgeting process dovetails with strategic planning. Now, again, you remember last week you came up with a strategic plan, and so budgeting now is that piece of it that kind of putting where the rubber meets the road, putting your money where your mouth is, so to speak. And so you allocate money based upon some of those strategic priorities that you laid out in your strategic plan. And then you compile the budget, amounts at the departmental level, right? So everybody gets their piece of the pie, so to speak. And then, of course, the budget has to get approved. Alignment and permission. Now, what some organizations do is they go to each department and they say, what do you need for your ministry? So you can start at the top and say, all right, we're going to give these ministries XXX, XYZ, but typically the ministries themselves have a better handle and on the specifics of what they're going to need to run their department. So usually budgeting is pushed down to different departments, but then it comes back up, right? And so the chief executive, senior pastor, executive pastor are the ones who look at that and then say, sure, or no, we're not going to spend, $30,000 for a new car for the youth ministry so the pastor can drive around a new car. All right, a bit of an exaggeration, but that's typically budgets go up and they are aligned with those overall strategic priorities, and then they are adjusted. Now, you know what I've never seen? I've never seen a budget go up and they say, we don't think you're spending enough money down there. We're going to give you another $20,000 this year just because we don't think this is enough. It's usually the exact opposite, right? Those of you that budgeted, you know this, right? And so sometimes we'll sort of have like our dream budget, right? It's like, we really need to do these things and we're putting in this money for this and that. And then, variably it goes up and it gets shot down, right? You're like, oh, well, I guess we're not going to do that, right? So that's typically what happens. So, the mindset should be, all right, what's reasonable within our current status? Like, are things going well right now? We know that tithes are coming in. We know that we have the money to ask for this, so we can make a big ask, right? But sometimes you're like, things are lean right now. I need to be a team player. My department needs to be a team player, so we're not going to make the big asks. We're not going to make the big ask this year, and so give a budget that's more likely to be approved than not. Administration, simply a tool that must be flexible. So, we're going to look at some specific tools that you can use, programs, spreadsheet, et cetera, et cetera. And then reporting. So typically what your accounting department will do on a regular basis, a monthly basis, is they'll give you a budget to actual. So they'll show what your budget was and they'll show what you actually spent and then the difference. And this is important if you're a department manager because you're going to get that back and you're going to say, oh, I spent all my budget, or, oh, I still have some budget to spend. Let's get spending. And then archival, you include the budget and the budgeting process in the official records of the church, the council. Usually budgets get approved at a high level, definitely senior pastor. Oftentimes the council will have to approve it, or the elders, or maybe even the denomination. But it's not just something that you can submit your plan and budget for your department and it goes through. No, it's always part of a larger approval process, which makes sense, right? Because, senior executives and council, they have the ultimate responsibility for the fiduciary control, right? So the ultimate responsibility that things are done well and that there's no misappropriation or overspending and those sorts of things. All right, now I mentioned earlier a budget versus actual. So this is just sort of a short example here on this spreadsheet. So you see the line item, salaries, utilities, community outreach, youth ministry, and then you show how much was budgeted. Okay, so salaries was $50,000, utilities $6,000, outreach $9,000, youth ministry $4,000, maintenance $3,000, admissions $7,000. Okay, so this is what at the beginning of the year you align these amounts with your strategic priorities, right? Using previous data from prior years and adding in maybe new ideas, new programs, new outreaches, right? That's what this budgeted amount represents. And then the middle aisle here that says column, not aisle. What am I walking through? A theater, the middle aisle. The middle column here is the actual amount, and you show what you spent. So the budgeted amount versus the actual amount, right? So this is what we said we were going to spend. This is what we actually spent. And the difference between those two is what's called a variance, right? So this is where you say you're either over budget or you're under budget. Now, let's take a look at these. And I know we're not interacting here live, but just for fun, tell me whether or not we're over or under budget here, okay? So you budgeted $50,000 for salaries. Actual was $51,000. There's a positive variance there of $1,000. Does that mean you're over budget or you're under budget? Well, if you said over budget, you are correct. This is $1,000. So somebody got paid $1,000 too much here. Now utilities, you budgeted $6,000, your actual amount was $62,000. Your variance is $200,000. Is that over or under budget? That's over budget, okay? You overspent $200. Now community outreach, you budgeted $9,000. You spent $8,500. There's a difference of $5,000. Now you can see this one's in brackets, right? So what does that mean it's in brackets? Well, that means you're under budget, right? That means you didn't spend $500 of your budgeted amount. So hey, quick, let's go out and let's spend $500 on community outreach. What are we going to do with that money? Now, this is actually an interesting point because sometimes when you get close to the end of the year, budget managers will look and they'll say, oh, I've still got all this money. I better spend the money quick. And the reason why they do that is, first of all, they want to use it for their department. But second of all, if they don't, they know that next year, the folks on the top are going to say, well, you've only spent this much. You really don't need that much. So, if you budgeted, let's just say $9,000 for outreach, and you only spent $8,500, guess what? Next year, your budget's probably going to be $8,500. And so budget managers often see this dynamic and they want to spend everything in there. But if things are tight, invariably you'll get an email or a notification from the finance guy and say, don't spend all of your budget money. Make sure you don't have to do that if you don't want to, because it's kind of funny, right? On the one hand, they said, yeah, you can spend all the money. But when you get to the end of the year, they're like, please don't spend all the money. Because again, these are real dollars sitting in a bank account, and people that are in charge of those things they always try to maximize or minimize the expenses in order to spend money on other things, right? That's kind of how it goes. All right, so this is what a budget versus actual report looks like. So you've budgeted these things here, and then as time goes on, and this is usually done like on a month to month and then an annual basis. So let's just say your accounting year is the same as the calendar year, right? Now sometimes your accounting year can be different. Sometimes your accounting year starts in July or August, and for a university that's pretty typical because that's sort of the beginning of a new season, right? The fall's coming up, and then through spring and summer. That's an accounting year for a school. Now, a church might have that, or a church might start in January, right? Everything kind of starts over. So you can determine what your accounting year is. It doesn't have to be the same thing as a calendar year. And so these reports will be done on a monthly basis, and then at the end of the year, you will have an annual snapshot, right, of what you spent. And you can say, this is what we budgeted for the year, this is what came in, over, under, and then you do the process all over again. Now, this right here is an income and expense statement. Okay, so this is your actual right here. This shows what actually came in. So for this church right here, they had $30,000 of tithes and offerings, $5,000 in missions, $4,000 in building funds, and $1,000 in book sales. It's for a total income of $40,000. And their expenses here, maintenance, missions giving, salaries, and for an expense of $24,000. Now, by the way, $24,500. Now, you'll notice here there's actually a difference, right? And what is that difference called? That's the over-under. That's income over expenses. Now, in a business, you would call this what? Net profit. But you can't do that in a church. Why? Because we're a non-profit organization. So the language you use in your income and expense statement should reflect that. So you don't say, we had a net income of $5,000 or $25,000. No, you didn't. You had that much more income than you had expenses. It's not a profit. You never call it a profit. You call it income over expenses or reserve. And so that amount there, right, theoretically is available for next year. You could put it in reserves. And actually, you probably want to have a line item in here called reserves, and that might zero out so that at the end of the year, it equals out. Now, let me mention something here. If you notice on the previous spreadsheet, we had tithes, but then we also had offerings and missions giving and those sorts of things. So anything that is given for a specific fund, like missions, like outreach, like a building fund, these are what are called designated funds. Money given by congregants to specific causes. And the key thing to note here is these have to be accounted for separately. Okay, so you can't lump those things in with all the other tithes, right? General tithes and offerings. General tithes and offerings can be spent on whatever. But designated funds have to be spent on those things. And so churches use what's called fund accounting to keep track of all the designated income and expenses. A church has a legal and ethical responsibility with this and cannot commingle with general funds or spend on anything other than that purpose. And the mishandling of designated funds is a serious fiduciary breach and can be actionable. Okay, so what does all that mean? It means that if people give to a certain thing, the church has to account for that money, and that money can't be used for something else. So let me just give you an example here. Let's just say you have a building fund, right? And you anticipate for the year your tithe is going to be $100,000. And you also have, let's just say $20,000 of building funds coming in. And so at the end of the year, you have $120,000, right? Now, what if the church says, well, we could use that $20,000 to help us with salaries this year, right? Or we could give it to the poor, right? No, you can't, because that money has been designated for the building fund and it should only be spent on the building fund. And if you use that money for operations, i.e. salaries, maintenance, utilities, you are in breach of your fiduciary responsibility. And churches get in trouble with this all the time. So make sure you understand and you set up a designated fund and a way to track those designated funds so that they're only used for those things. Otherwise, they can be actionable. In other words, people can come back to you and say, we gave money for the building fund. We gave a lot of money for the building fund. We don't see the building going on. Well, here's how we spent that. Here's the money that came in, and here's where the expenses were, right? So you can always give an accounting for the funds, right? So we have an accounting for the hope within us, and we have an accounting for the money that was given to us for specific causes. All right, so that's what designated funds is. Now, to avoid these issues, right, again, so this is something you get in trouble for, maintain clear records, track designated funds separately from the general funds, seek donor permission. If the church needs to repurpose the funds, it's best to ask donors for permission in writing. Okay, so no, it is possible, right? If let's just say you have an operational shortfall and you need to use some of those designated funds for that, if you go back to those people and say, hey, we know you gave for the building fund, but we really could use them for this other thing this year, is that okay? And if they say, sure, that's okay, you can. Now, if they say, no, you can't, right? And then have policies in place, establish and enforce policies around this designated giving to ensure adherence to donors' intention, right? Now, here's an example of what your designated fund might look like in a spreadsheet form. So here's the fund name, the food fund, designated for feeding the community. Amount received, $5,000. Amount spent, $1,200. Balance, $3,800. So this $3,800 here represents how much you still have to spend on that particular thing. The building fund, right, they raised $15,000. They've only spent $5,000, and there's a balance. So you will always have a balance in your fund. So it's not just in cash somewhere, it's actually separate. You have a separate accounting for what the fund balance is at any given time. Okay, so let's talk about some accounting best practices. Okay, so far we've talked about budgeting, we've talked about designated funds, but let me just give some oversight of some best practices here in accounting. One of the first concepts here that you want to understand is what's called accrual versus cash accounting. Accrual accounting records income and expenses when they are earned or incurred, while cash accounting records them when the money changes hand. Many churches use cash accounting, but accrual provides a more accurate financial picture. Okay, so let's just say you spend money at the end of the month on well, I'm trying to think of a good example here. Well, let's just say you have some building maintenance that has to happen, and you go to the local, Home Depot or big box store, but you have a credit account there, right? And they'll allow you to buy things on credit. So let's just say you spent, $500 and you used your card. Well, there's no cash that happened. You actually, at this point, you have what's called an accounts payable. So you owe that money, and that goes under your liabilities. Now, this is an accounting class. I can't get too deep in this, but the general point is that if your accrual, if you spent the money, you still want to account for that on the book. So at the end of that month, you would say, we didn't take it out of cash, but it's still a liability because we're going to owe that money whenever they send us the statement for the credit card. So you account for the expense in the month that it actually happened, not in the month where you spent the cash. Does that make sense? Okay, now a lot of churches use cash accounting. So, they'll spend the money, the $500 at Home Depot, but it won't go on the books until the next month when they actually pay that credit card statement. So when it comes in the mail, you look at it, oh, we owe $500 for the stuff we bought last month. We're going to write a check, or we're going to do an electric deposit to Home Depot. That's when you account for it. Now, why is this important? Well, because there's such thing as liabilities, and you want to account for those. So if you close out an accounting period, let's just say it's the end of the year, and you're trying to tell folks what you spent money on, right, for that year, and say you have some accounts payable, that were incurred at the end of the year, and you haven't paid them, but they're due. Well, accrual accounting would allow you to account for those even before you spent the cash. So if you were on a cash basis, you might hit the end of the year, and let's just say you had, 10 different accounts payable out there that were due. You're going to have to pay them in January going forward, but you didn't put them on the books. So that would misrepresent what your finances are like at the end of that year. Does that make sense? Okay, I know it might be a little confusing for some of you, but that's basically why you do that. Another important principle here is what's called segregation of duties. And I'm going to talk more about that on the next slide, so hang on. But that's an important concept as well. But essentially, segregation of duties means that one person is not in charge of all the different aspects of accounting. And again, this is for accountability, ethical practices, to make sure that one person doesn't have control over all of the aspects of cash. So if one person is counting it, one person is signing off on it, one person is involved in the budgeting, right? One person audits it. You can see there's a lot of potential for mismanagement there, for people to, fudge things, to spend money inappropriately, and nobody would know because they're the only person involved in that, right? So it's common in accounting practices to have different people doing different pieces of it. I'll talk more about that in the next slide as well. And then, of course, internal controls to prevent fraud. Checks and balances to safeguard church assets, including dual signatories on checks and regular audits. Now, how many of your churches are still writing checks? Well, we still use checks, right? Sometimes it's a electronic check, but sometimes, we're still signing off on things. And that's the classic way to really ensure that, that there's dual signatories, especially for large items, big spends. More than one person needs to sign off on those things. Okay, so let me get a little deeper into this here. So how do we segregate? What are the kinds of duties that we segregate in accounting? Well, the authorization versus execution. So the person authorizing the electronic transactions, like a payment or a transfer, should not be the same person executing that. For instance, the church administrator might initiate it, but the finance officer should approve it. Okay, so in other words, one person might, say it's okay to spend that money, and the other person actually spends the money. So if the person that says it's okay and spends it, right, that's where you have some potential for misuse. So you want to separate those things. So some churches use what's called a purchase order system for large expenses. Now, you don't need to get approval for every little thing. If you need to run to the store and pick up some supplies or food or those kinds of things, typically you will have a policy that has the threshold at which things need to go through a purchase order or have double signatories or those sorts of things, right? So a purchase order system says if you want to buy like a new computer, or let's just say you're in the music department or the live production, you need to buy a new camera, and these things are like $5,000 or whatever, you need to have a purchase order. And so the purchase order is something that comes from the organization that you give, that you have to have in hand in order to purchase a certain thing. And so a lot of vendors that sell things need to see a purchase order, right? So they know that you're authorized to actually spend this money. And then, of course, a monthly review of all credit card expenses. So because there's so much electronic transfer now, we're not using checks as much, but somebody needs to review all of the credit card expenses on a monthly basis. So let's just say you're the youth pastor and they give you a credit card. Now, that sounds like a dangerous proposition to me, but let's just say your church trusts you and you have a credit card for your department because you're always going to the store, you're always buying, snacks and food and games and those sorts of things, and you have the budget to do it. Well, when that statement comes in at the end of the month, somebody in the accounting department should be reviewing that and looking at those expenses and saying, yes, they were authorized to spend those things. So that's segregation of duties. Here's another segregation of duties: access to banking platforms. Only trusted personnel should have access to electronic banking platforms with strict controls and permission. Ideally, the individual managing online access is different from those conducting the transaction. So I already mentioned that before. Reconciliation versus recording. The person responsible for recording transactions in the accounting system should not be the same person reconciling bank statements. Now, I can't go into bank reconciliations or bank recs as they're known, but it's a way to make sure that you have on your books exactly what the bank has, and if there's a difference there, you can account for that, right? So again, because sometimes, let's just say you do write a check. Let's just say you write it on January 30th. But the person you wrote it to doesn't deposit it until like February 15th. Well, you need to account for that, right? So this would be accrual basis. You would put that on the books, but it hasn't hit your bank. So every month, organizations will do a bank reconciliation just to make sure they understand where the difference is, and they're not surprised when all of a sudden they get this expense from January popping in. And then, of course, doing regular audits and reviews. An independent person, often from outside the finance team, like a board member or a CPA, should regularly review all transactions, deposits, and financial records to ensure accountability and transparency. So again, if you're a bigger church or ministry, you probably have a CPA, right? And every year that CPA comes in and they look at all the books and they account for things and they make sure that the amount spent was actually the amount budgeted. That's one of the main things they're looking at, right? And that everything was signed off properly. They have receipts, right? So this is why it's so important when you go out and spend something that you turn in your receipt so that when that expense hits the books, they have a receipt to back that up. Okay, so if your accounting department is anything like mine, if you don't bring in a receipt, you're going to be in hot water because they don't know what that money was spent on. And this is the kind of thing that the accountants look for, right? They're going to look at the receipts. They want to see those receipts to make sure you have documentation for everything spent. That's why it's so important for you to keep receipts and to turn in receipts. Okay, let me give you an example. I still have this in here. All right, so I went to a conference earlier this year, and I got my bag of receipts right here. Well, it's not a bag, it's an envelope. And let's see. So you look at that. I got my receipts in here, all my different receipts. Blah, blah, blah. Okay. Probably too much information, but keep track of your receipts. Your accounting department will love you for that. Okay, now let's shift gears a little bit, and I want to try to wrap this up quick. So again, churches, because things can become complex real quickly here. Churches often employ some type of church finance software. And so there's some popular ones out there. Maybe you've heard of QuickBooks by Intuit. PushPay is another one that seems real popular now. Every church I go to seems to allow you to tithe using PushPay, right? It's an app. It's right there on your phone. So if you've ever wondered what that's about, well, it's a way for people to tithe and to give money to the church. And on the back end, it's a way for the church to keep track of all those things, right? So now because of the internet and electronic deposits, the cashless society, there's outfits out there like that allow you to receive monies and also account for them at the same time. ACS Technologies is another popular one. Power Church Plus. So these are good ideas. And why are they essential? Well, using specialized software simplifies financial management, offers reporting capabilities, and ensures that data is secure and organized. So I used to have an exercise in this class where you would explore these different things. I don't do that right now, but if you need to find out something, if you want to learn more about it, I encourage you to look at some of these sites here and learn about this finance software. And when you look at it, you should evaluate things like, is it easy to use, right? Because again, you might have like volunteers or multiple people using these things, so you want to make sure that it's easy to use, user-friendly interfaces. What kind of reporting capabilities does it have? Does it have the ability to generate income and expense reports, donor contribution statements, and year-end summaries? Now, this donor contribution statements is important because, as you know, as an American citizen, at this point in time, you can use a contribution to a church as a deduction, right, on your tax return. And so that's why at the end of the year, you start getting all these statements. Thank you for giving, to this organization or that organization. So people, you can use that, right? if you itemize your deductions. So now on the giving side, on the church side, you're the one that has to produce those giving statements. And so these kinds of softwares are set up for that because it tracks how much each different person gave. And at the end of the year, you can spit out those reports, and it usually has their address, and it's all really integrated. You can send that receipt to that person, that donor statement to that person, and say thank you for your contribution. Make sure it integrates with other tools like payroll and membership management. And this is a whole other thing too, right? Membership management, like who is a member, how do you count for members, how many members do we have, et cetera, et cetera. And then, being able to contact them through email and through text. So these systems now are very complex in the way they communicate and keep track of people. And then, of course, security. They need to have secure logins, encrypted data, regular backups, et cetera, et cetera. All right. Now, one other tool here, it's kind of a basic tool, Excel or Numbers if you're a Mac fan, or Google Sheets if you're cheap and you don't want to spend any money on these things. There's all these products out here. So spreadsheets are valuable tools for churches. If, let's just say you don't have a finance software, right? You can use something like Excel or Numbers to provide simple yet powerful tools for managing finances. You can use them to create budget templates, and you can use them to track income and expenses. Okay, so let me give you some examples, and we've already saw these earlier in the class here, right? But this one right here, all right, so this is what you got, your lines and you got your columns. No, I'm sorry, your rows and your columns, right? So going this way are your rows, so salaries, utilities, community outreach, those are rows, and then these are columns. And it does all the math for you here, right? So that variance number here was a simple math equation, this minus this. And so this is one example of how you can use Excel to help keep track of finances, as was this one here, right? So I just have a different layout, but you have all your income here, and it does the math for you. You have your expenses here, and it does the math for you, et cetera, et cetera. That's the wonderful thing about spreadsheets is you don't have to sit there with a calculator. Now, when I started doing accounting back in the day, and I won't tell you what day that was, but it was a long time ago, everybody had a calculator on their desk, right? Nobody has calculators. Finance people still have calculators, but if you use this, you don't even have to have a calculator because it'll do the math for you. How cool is that? All right, so in conclusion, I know I went kind of long today. Thanks for hanging with this, and hopefully your mind's not ready to explode with all this technical accounting, budgeting, lingo and stuff. But we talked about budgeting and accounting, the difference, the importance of budgeting, the difference between budgeting and accounting, and the how vital it is for churches to make sure they do this right and have good books and are accountable. Otherwise, they can get a lot of hot water legally, ethically, etc. We talked about some of the finance software that's available out there. And then we also talked about using Excel and Numbers. Well, listen, that's it for today. Thanks so much for tuning in and paying attention. I hope this is helpful for you. God bless you, and we'll see you in the next lesson.